Good morning, everyone. It is Monday, October 25th. And this is Morning Market Movers, where we do live analysis for day trading. I'm Todd Rich with Nadex. With me from Keep Trading Simple, Brian Caprice. Before Brian and I look at some potential hotspots in the markets for today, I do need to quickly share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Well, it is a relatively quietish start to the week. What are we going to be looking at today? Well, one, we're going to have to look at energy. Energy seems to be the hot topic of the day. We can see that nat gas gapping higher on the open last night. So nat gas, was uh, down closer to $5 per million BTUs, and here we are, working our way back up towards 6. We're also seeing an increase in oil. Oil creeping up. I think it's just shy of $84 a barrel. And then if we
85.
want to throw into
Just
the
shy of
discussion,
85.
where is it?
Just shy of 85. It's at 84.79.
Oh, 84. Oh, just shy of 85. Wow.
Mhm.
Okay, I was as close as any economic
Yeah.
analyst.
Yeah.
Somewhere in that range. All right, so coming up on 85, I want to throw into that discussion. I know there was some information, some article in the Wall Street Journal today all about propane. Also fits right in there with the, even though our reserves are up, they're shy of where they would normally be this time of year going into winter or going into fall, and we still got all the weather folks predicting different things. I don't think it's supposed to be that bad of a winter. I think we're supposed to have some El Nino stuff, so maybe people shouldn't be panicking as much as they are, but they certainly are making some headlines. We'll probably take a look over at the equities. They're all looking to open slightly in the green. That's really what we got today, is energy and equities. Metals not moving too much. Uh, Foreign exchange not moving too much. I think there's one currency pair we'll take a look at. Brian, let me flip it over to you. Let's start with the energies, and we'll look at these
Sure.
charts, and then we'll just kind of work our way around to some of the other hotspots.
Sure. Yeah. I mean, in the overnight, we really haven't seen too much. A couple different comments coming out about inflation, and again, we can end on inflation today. German info business climate. Again, that's not the temperature. That is, again, what the environment is like for business, and again, that came down. But for the most part, really, there's not much out there. European weakness is about the only thing that we are seeing right now, and you're seeing it in the euro dollar, euro pound, and kind of the pound yen a little bit. But that's really that's basically it. The biggest jumps today have been, I would say, probably in the energies, oil and natural gas. You can see that here's our European session in oil. And it's kind of the same thing. Transitory is kind of the word of the quarter, and then supply shortage is the other one. Everybody's talking about it. Again, they're all kind of linked. It's inflation / shortages. But right now, we're pulling back up again. We broke up at 85 just a little while ago. We're back down about 15 cents at 84.85. I would say, again, remember, oil tends to be a U.S. kind of based supported move. We've seen, in weeks where we've had kind of pushes down, our session is when it tends to go higher. Now, there's a couple different varying reports that we've seen. I would say right now with it basing, it's probably set for a bit of a pullback. But then again, if the flavor of the day is, oh, we're going to run out of oil, Again, it's not necessarily the case. We just haven't heard of these kind of quiet other technologies that are out there that people are not using yet, because again, they don't fall into the environmentally friendly category, but they are still legal, and again, they're still out there. So, right now, I would say look for a potential reversal in this one. Monday morning, as always, we got to see kind of how the traders are going to step in. But look for a quick reversal if we do get a basing and kind of a pullback pattern at the open in oil. I would say watch out for that one. And then natural gas, obviously, is the big one today across the board. Besides AMC and GME and actually Dogecoin, this is the big one. And you're seeing it already start to pull back. We had a bit of a gap this weekend. And there's a number of articles. Todd found a few talking about supply shortages. We're not where we're at. Again, this goes back to, are you watching the headline? And something that I saw earlier, and again, this is inflation / weather. Dorsey, the CEO of Twitter, everybody knows who he is. He made a comment about hyperinflation. Again, Jamie Dimon has said it. Paul Tudor Jones has said it. The only one that hasn't said it is the Fed or Yellen. And what he's saying is,
Actually, Yellen even came out with something encouraging over the weekend, as I recall.
she's not even on like the hottest news. So, like I said, she has basically become like invalidated as far as impact news now. She doesn't even, she shows up as a minor impact or not at all. It's crazy. A person in her position. But anyway, let me read this real quick. He talked about how, although we're not seeing it in CPI or PPI, it lurks around the bend. We're seeing, basically hyperinflation means extreme price rises in a short period of time. It says we're only one snowstorm away from $100 a barrel oil and natural gas prices going even further through the roof. What's interesting about that, and again, it's whether we believe science or not, guys. Here's the outlook that came from NOAA.gov. It's a government site. It is not an industry-specific report. We are supposed to believe science. We're not. It's supposed to be a lot warmer. Right. It's going to be higher. The only place that it's supposed to be colder is, again, in the Pacific Northeast or Pacific Northwest. My in-laws live right above where this chart is. They've been begging for it because a lot of their industry is travel, skiing, those kind of things. So they're like, yes, finally. Right. But you'll see overall, most of the United States, yeah, they want it bad because they really haven't had major areas. It's supposed to be much more. If you look, and again, I don't have it up here. I apologize for not having it. But if you pull up a population chart of where most people in the United States live, where the biggest demand is, it's supposed to be warmer and drier this winter. So again, you can believe science or don't believe science. Anyway, on a trading front, we do have a level a little bit above in natural gas, and depending on where you want to kind of draw this, because again, these levels were formed on the 15th at about 5 to 8 in the morning. I would say that $5.70, but in reality, it's more kind of that 574-ish, kind of the refined level from the original test, maybe 575 because it's a quarterly number, would be kind of more of an area where we'd be looking for this to kind of turn and roll back to the downside. So, I would keep it on the radar. Do I think it stays up here? I mean, it's one of those things, if you're a propane producer, we have a lot of propane, a lot of natural gas in the United States. That's what we do. We have a lot of oil, but those are the things that we are known for having, particularly in Pennsylvania. There's a ton of it, right? If you're seeing these prices rise, are you a producer that's suddenly going to be like, nah, we can just produce more, guys. Don't worry about it. No, because they're taking advantage of it and they're making bank right now. So, right now I've seen nothing about our in-ground supplies or anything like that. We're just hearing supply shortages because, again, everything is, transitory and supply shortages you can use for every single thing out there. Right. So I would be saying, again, everybody's reacting to this article. There's the gap higher. We tend to revert back again when we see those type of moves. So would I be surprised if we come back into the 530 range? No, especially with, again, anytime anybody talks about this hotter, we don't necessarily need it. And again, there were some choice comments that people made about, and again, this is how to get known, get yourself known. Make a comment about for propane, it's going to be an Armageddon, and it's like linked everywhere. So if you use a big word because you want to be known,
yeah, it'll get picked up. That's how the algorithms work.
Yeah, exactly, right? Oh my God, everybody! He said it's going to be Armageddon. What does that mean? I have no idea.
But it's a scary word, right?
Yeah, and the article that I found on it, the most recent one, was actually in an RV magazine, and it says less than 5% of homes in the United States actually use propane. Yeah, you know who uses propane?
You know who uses
recreational vehicles like RVs, but that's it. Less than 5% of households.
Right. It's restaurants use it to heat the patios. That's where you end up. Probably the largest consumers of it. Right.
Yeah, but you know what? All those people up here are like, we have snowmobiles. We need it for our snowmobiles.
Yeah. Right.
So kind of the same thinking, guys. Look for a little bit of a top, kind of see where it is. There's going to be an initial reaction because, again, everybody saw this Armageddon headline. Oh my God, we're running out. But again, at the same time, climate change. Yeah. So it's how is the world getting hotter, but yet we're going to run out of natural gas for heating. It's one of those things that all these people here are going to use a whole heck of a lot less than what they originally had to use. It just,
but it's moving the markets right now, and it's creating some trading opportunities. So
yeah, so me personally, I'd be looking for short opportunities. Look for a confirmed top in there after the open. Again, I expect there to be a little bit more of a push up in price as all the retail traders are getting access to it.
A little bit right now as we speak. In fact,
yeah, I'm delayed 10 minutes on natural gas. Oil, I'm live, but natural gas, I'm not.
We're actually pushing a little bit higher right now, getting up closer. We're getting up to close to that 585 range, and so. Watch natural gas. That's definitely a hot spot to be looking at this morning. And where was your level up above? on yours? I guess I couldn't remember.
575, 580 on mine.
Okay, so yeah, we're kind of getting into that range right
Yeah.
now, where you might be looking for it to roll over, and so
Mhm.
something
And that
to
was
be
a pretty
looking
big
at.
push. Yeah, that was a pretty big push with a little bit of backstopping on it as well. Right in here, you can see there's a little bit of a backstop right above it. So it's kind of one of those areas that's pretty decent. And again, it's kind of a level on top of a level. So you can see that there's a kind of an overlapping bit there of where I'd be looking for this. But like
Yep.
I said, it's cool to run the market up just to
As
be able to take
everyone's
it back
waking
down.
up right
So
now and everyone's reading the paper,
hmm
it's punching higher right now.
hmm
In fact, here I'll bring it over. It is punching higher a little bit right now. Uh, we can see on this. This is a 15-minute candle.
hmm
Yeah, it's 582. It's 583. So anyhow, one hot spot. Nat gas. I don't know if you wanted to do quick oil before we jump over to equities. I want to keep us moving along here.
we started with oil. We started
Okay,
with
let's
oil.
go to
We drew the
oil.
top in there. Yeah, I would say. I mean, it's kind of the same story. Right now in the overnight, we've seen Europeans drive it higher. Typically, the European market kind of positions us, and again, you can see that there's the big up and the big down, and then the big up. Right, the big this one was a little bit down, this was a little bit down, down and up, down and up. We typically have reversals, so the pattern is even though we have something like where is it like right here, right? They drove it up, but then it got driven down, and then it still ended up coming back up again. So it doesn't mean that it's going to be just a perfect V. It can do a lot of things, but again, all the profit taking from the European session could potentially drive us down, and then again, could it go higher? Sure, absolutely. But again, I would look for a pullback, and that would be the morning kind of trade I'd be looking for. Is everybody saying, "Oh my God, oil's higher again"? So supply shortages, even though that's not necessarily what we've seen. We've seen a build over the last 4 weeks. Last week it was down just a little tiny bit, but the expectation was that it would be a high, a big gain in supply. So it's there. I would look for a pullback in both these, and then kind of again a potential push depending on how far they want to drive it.
All right. Let's take a look. Let's take a quick peek over at equities. I know that everything's
Sure.
looking to open slightly in the green. Nasdaq leading the way today, and I know that they've got some earnings. I believe Facebook
Mm-hmm.
reports after the close. So I would
Yeah,
expect to see some people positioning around, during the day going into
mm-hmm.
the close as well.
Yeah, and it's interesting right now. You typically don't see this pattern where you have the VIX in the green and you have all the indices. As the volatility goes up, the VIX level obviously increases. That tends to be bad. With increased, anxiety and volatility, that's what rises it. But that also typically means, nobody's getting nervous when the ES is going all-time highs. It just doesn't work that way. But you're seeing the VIX gap up, and then in the overnight from Sunday, it's starting to pull back down again, which is probably why we're seeing green. So it's kind of set up more, if this is unable to kind of push any higher and the VIX continues to drive, it looks like there'll be much more of a takeoff point for the ESNQYM and Russell. So, looking across, let's drop it down to a 15-minute chart. You can see pretty much since late last night, we had this little push up, and then really the European market that came in approximately right here didn't really provide much momentum either way. Last week, we talked about getting up to that 45.50 as being a target, and it did. Literally, it cranked it on Friday, and then, drove all the way back down. It was like, what happened? Like, it was funny. It drove through. I was like, yep, it hit it. And I went to go feed the baby and came back like an hour later. I was like, all right,
Eh.
who hit the reversal button? Which, by the way, I'm just going to say this right now. What time did this one change? 10:30, where we talk about reversals happening, is the most common reversal time. So, you couldn't have timed that better as far as reversals go. But right now, again, I wouldn't say the Europeans have really driven our market one way or the other. There's no economic news releases that really, I don't even think on the minor impact. Yeah, even on a minor impact, there's some Belgian news which is not going to affect us, and then Tenreiro speaking. So there's not really much today, guys, besides just headlines. The only headlines we're seeing is a lot of inflation stuff. Germany is talking about higher inflation. You can see over here, I mean, these are the stories from the hottest stories of the weekend. Yellen is nowhere over here, so I'm not sure what she said, but it doesn't even pop up on the most important list of things. And again, a person in her position, it's kind of crazy.
Yes.
Here's persistent inflation. Central banks are going to wait. What will happen when central banks wake up to more persistent inflation? Like I said, over here, look, we'll likely keep observing relatively high inflation rates. I don't know. It went from everybody was like, we're not worried, it's transitory, to now everybody's like, yeah, we're watching these relatively high inflation rates. So I don't know. I think gold is something that everybody should be watching out for this week. Again, we are holding above now.
And that was actually rather interesting. What gold did on Friday. It made a move. It completely retraced it. It's still in a bit of a. It's if you take out that move, it's in an upward channel.
Yeah, and everybody's talking about it being persistent. So we've mentioned this last week. Was like, listen, gold is coming into a time, and we mentioned it should be at 1800. It should be. Well, guess what? Now we're at 1800. A couple days later, we've got a couple levels up top where there could be some selling in. And again, this is a parabolic move, guys. We had a big parabolic move up. It banged right off of a level at 1812, 1030 reversal, straight down, and now it's just retracing back up again. So 1812 was probably on the cards for today. Silver lagging behind a little bit because, again, this is the big boy inflation. This is not the Reddit inflation. You're seeing gold actually outperforming silver right now. But again, 1812, I wouldn't be surprised if we got on the radar. And again, remember, it's Monday. It's 9 o'clock. It's 9:01. I want to make sure we get out of here. Remember, Monday trading, when we're finding these areas, this is ideal for knockout brackets. Why? Because you have the duration of having them be all week long. So again, if you're starting to see major levels like this, look to see if you can get some potential reversals. And again, not just in the equities and in gold and silver, look at the currencies. I will tell you right now, a lot of currencies right now, particularly the European pairs, are at extremes. When we talk curve levels, we are talking extreme high and extreme low. Those are great opportunities, especially with the amount of speeches that we have this week. We have a lot of speeches and a lot of rate statements this week. If you look at it for the week, and again, we'll go over this tomorrow.
Yep.
Monetary policy. A rate statement, they're not changing it, but rate statement for the CAD tomorrow. ECB press conference, monetary policy statements. Guess what? We are 1 month down. We are 2 months from the end of the year. Europe says all their raising and everything comes next year. So every time we get there, one hawkish mention of inflation,
Changes
gold
everything.
could really go to the roof.
This next year, clearly, and we're going to be keeping an eye on that. All those FX pairs. That's where we're going to be seeing a lot of volatility. We know it. As interest rates start changing globally, central banks start making moves. We're going to see all those pairs constantly adjusting, and that is actually we know that's coming. So if you're not real familiar with FX trading, we've got some basics of FX. There's plenty of education on the Nadex website. You can also check out Daily FX, our affiliated company, where there's some educational content there. Start familiarizing yourself with the FX markets because they are going to get hot next year. And in fact, at the end of this year, it's going to all start. Tapering starting. We're going to
European
watch
market
this
said
happen.
December, January is when they've done the strategic allocation of funds, but have not tapered. But then it's going to come fast and furious, and they'll be raising next year. And again, I think the consensus is now the U.S. is going to raise twice, but maybe 3 times once they start in the same year. So
right next year, and I mean we know tapering starting now in the U.S. here in November. So here we go. Get ready for some of these morning market movers. It's going to be in the FX markets. So this, you know what's coming, and we know it's coming. So we'll get ready for it. All right. Well, with that, any questions for Nadex, please email us customerservice@nadex.com. Questions for Brian, you can get Brian at support@keeptradingsimple.com. And to clear up some questions I know we got on Friday, we are doing this every morning. So Brian and I will catch you again tomorrow morning. What did we talk a little bit about today? It was mostly about energy. We saw nat gas gapping higher on the open in the Sunday night session. We're seeing some trading opportunity, or at least some volatility in nat gas and oil. But we'll probably see a bit more over. Keep an eye on the FX. I mean, on the FX in the NASDAQ, over in the equities with earnings coming out. I know Facebook's later today. We're probably going to see a little bit of movement there. Brian and I will catch you all again tomorrow morning. Good luck in the markets, everyone.